Greetings, crypto land. We've got Bitcoin breakdown action. This appears to gradually be getting worse and worse. I hate to be the bearer of bad news for the Bitcoin bulls that are out there, but Bitcoin's having a hard time holding on. 4 or 5 weeks of videos, I've had this channel here that is forming a very strong resistance to the upside. My last video, I drew in this triangle here. That was 2 videos ago. My last video, we broke down out of it on this last large red candle here. We broke down to 32,682, give or take. And I made my video right there, and half hour or so after I edited and published that video, it occurred to me that breakout, I was talking about it breaking down out of that triangle, coming back, retesting, and breaking down again. It did that almost exactly as I said, and then it went along 33,000 sideways, but it is broke down again. But before I get to that, I want to show you an hour or so after I published my last video, I realized that bottom where it bounced actually matches up with these wicks, and I have that first triangle that you see there on the candle bodies. So I drew on in at the wicks. I did that on the daily chart. You can't really see a whole lot there on the daily chart. I mean, you can see that it's broken down out of that second triangle as well. Let's go to the hourly chart, and I'll show you a little more detail. This is the hourly chart. So every one of these little candles is an hour instead of 24 hours, right? So now you can really see there's that triangle. First one, we came down, we broke through it. See how it works? We bounced here at about 32,700, 800. Came back up, retested that triangle at 33,270, 33,300. Broke down from there all the way down to 32,300. And now that little guy is in the process of coming back up and retesting the bottom of that triangle. It's likely to go ahead and retest and break down again. The bad part about this is 33,000 has been a resistance support for a few weeks. It's been a clear and obvious support on this hourly chart. The 33,000 in the region. Bitcoin has clearly bounced off of it many, many times in the last month. The problem now is it broke down on that triangle at 32,800, 900. And if it comes back up, retests and breaks down, if the retest just follows what the pattern has been following for quite a long time now, it's going to fall down under 33,000. And the reason that is important is because there's just not a lot of support below 33,000. This is the daily chart. Up on the left, you see a Wyckoff distribution cycle. I don't know if anyone else on YouTube is showing that cycle. I don't know why. I haven't really been watching a lot of other videos. I've kind of went off and done my own. I've just been doing my own analysis, totally independent. I'm not watching other YouTubers, with the exception of a couple day traders that I find interesting to watch. But I don't know. Are other YouTubers still forcing that accumulation chart down your face without showing you what a Wyckoff cycle even is, right? They're showing you one little, or they were, I don't know. I don't even want to watch anymore. Are they still showing the accumulation, the Wyckoff accumulation phase, right? That's one little piece out of this chart to the left. That's a Wyckoff market cycle, where an accumulation is one little piece that belongs over on the bull side. When it's over here on the bear side, it's called redistribution. They're not showing the Wyckoff cycle pattern. They're not showing the redistribution patterns. For some reason, they're only showing the little tiny accumulation pattern, which this is not. This bears absolutely no resemblance to an accumulation pattern. So it's kind of upsetting to me. I know I've talked about that a lot, but it's upsetting to me that people are watching those kind of videos, right? It should be a little upsetting to everyone. I don't know. I don't know why people keep going back and watching channels that give out terrible information, like the channels that were talking about Apple's invested $2.5 billion. You're going to announce it Monday, right? You know, I mean, how do you keep going back to a channel like that and watching, let alone supporting it? I just don't understand. You know, it's almost like they got these, it's almost like they have their viewers, for lack of a better word, brainwashed into us versus them, right? And if the market goes down, then it's someone else's fault, right? And I can give out all this terrible, awful, lousy information. But when it's wrong, it's their fault. It's the whale's fault. They did it, right? So you know, I might not be perfectly right about everything I say, but at least when I err, it'll be on the side of trying. Not blaming other people, right? And then it being okay somehow. I mean, I don't know. There should be an anti-FUD. I was thinking HUD, HUD. FUD stands for fear, uncertainty, and doubt. I was thinking HUD, HUD, could stand for hype, unknowing, and danger or something. HUD can wipe out more people than FUD. Sometimes the FUD is real, folks, and that's just how it is, man. This is the money market. This is not lying. So this data in these money markets is not going to lie to you. This is going to be an accurate representation of what's really going on. I wouldn't trust on-chain metrics and data as far as I can throw it. And those computer farms weigh thousands of pounds, so I couldn't throw it anywhere. Volume's still not real high, but as you can see, the red volume is clearly bigger. You know what? I like using Kraken for the real data because this is Femex, and a lot of high leverage traders are on Femex. The Kraken doesn't really have high leverage traders. It's more just kind of I just like their data better. I have the same triangles and channel here. It just looks a little different. Have a look at volume here. I think this is a better representation because traders can you know, buy and sell huge amounts of leverage stuff. So on Kraken, I think it's more accurate. I just think it shows a true picture better. I may be wrong about that, but I think Kraken is lacking the super high leverage ins and outs. So as you can see, this red daily close, or this red volume bar is going to close probably a little higher than the day before. So this red volume on the down days is clearly bigger than the green volume on the up days, which says the same thing that channel says going down, right? Money's leaving the market, and that's true until it changes. Until there's big green bars that are bigger than the red bars. That's just true. There's no one can. There's no information out there that can overrule that fact. Money is leaving this market. That channel going down is the rate at which it's leaving. The volume says the same thing. Let's have a look here on Kraken at the hourly. So that shows it pretty good here. On Kraken, it actually shows it coming up and it's retested. See, the data is a little different from site to site. I don't know if I'm just used to using Kraken and that's why I like it better or not, but I think, like I said earlier, I think Kraken might lack a lot of the super high leverage stuff. So that's clearly broken down out of both those triangles. The first one, it came up, retest, fell back down. Interesting enough, it bounced in the exact same spot off the support of this triangle, which wasn't there at the time. And now it is. That's one of the reasons why it's there now, right? And it came back up, tested again, and then over the course of about 2.5 hours, it fell from 33.3 to 32.3. That's actually about a 3% drop in the price. That's pretty substantial, actually. And it's come up, it's back, it's retesting right now off the bottom of this triangle. And this is why I'm making this video, because this has me worried. If this is going to maybe this follows kind of the last pattern. Maybe it retests, comes down, and then comes up back for another retest and then drops. Or maybe it's retesting now and it drops. But that's why I fired up the video maker here, because this has me worried that this could be it. This could be the tip of the iceberg that we slip down and we slide all the way down to like 20,000, because there's just not that much support. Go back to the daily here, and if you look on the bull side, the last wick was at like 27,900 or so. So watch out for Bitcoin coming down to 30,000, setting a new low at 28,800, and then the last wick over here on the side was 27,900. There's just not a lot of support below 33,000. There's going to be a little support at like 31,500, give or take. You know, little support at 30,000 ballpark, maybe a little support at 28, but there's just nothing really over there until you get down to like, there might be like a hiccup support at like 26 to 27. I think there's a Fibonacci level in there that might come into play, but in a market that's just bleeding money, there's other Fibonacci levels lower, right? That we might want to start looking at. Here was about a 7-day accumulation at 23 to 24,000. Maybe that'll be the bottom. Who knows for sure? But I've always been looking here at this 30-day accumulation from about 17,000 to about 20,000, high 19,000s, which matches up to the old all-time high from 2018 bull run. It's the old all-time high. So I've always had my eyes on Bitcoin following this Wyckoff cycle chart down to 20,000, and it could go lower. It could go lower because the real accumulation, the base accumulation, if you will, for this bull run is I hate to tell you, is $9,000 to $10,000. Bitcoin could go to 9,000. Watch that 33,000 level. If Bitcoin cannot close daily candles above 33,000, in my opinion, I think it's just going to slide down to 31,000 and then 30,000. If it starts closing higher time frame candles, under 30,000, I think it's basically over at that point, and the rest is just kind of just the motion of it. It might happen kind of slower than I was thinking. Maybe it just stays in this channel the whole time. Maybe we get that big death candle, but maybe the death candle goes down real quick to 24,000 or 26,000 or something, and hops back up for a bit. Anyways, it's just the same story, man. Money's leaving the market. There's no data out there anywhere that can overrule that fact. It's just true, and until that changes, it's true, right? And this will keep going down. So watch the volume, watch the daily chart. You can watch it any chart you want, but I would suggest having the daily chart somewhere that just use it for your base case. If you want to see the overall picture, this daily chart is the one I'm looking at. The weekly chart shows basically the same thing. It just doesn't have, it just has 7 times less the detail. But I like the daily chart a lot for this. I hope you enjoyed the show. And as always, thanks for watching.